go. Welcome back. 2023 investment outlook. Light at the end of the tunnel. Let's get them on stage. Big round of applause. Karan Mohla, partner B Capital. Rajan Anandan, MD Sequoia, India and Southeast Asia. Gautam Shroff from Nuvama. And Saroja Yeramilli, founder and CEO of Melorra. Thank you all. Thanks for joining us. Okay, let's have some fun. Sum up 2022 in a word, one word. Sum up this year in one word from your perspective. One word.
I'll go first. I have the easy one. Volatile. Volatile.
Volatile. We're going to come back. Volatile.
Slow.
Slow. I like it.
India outperformance.
The best growth we've ever seen.
Okay, elaborate on all your points.
So I think volatility is the easy one. We started the year with, being at the top of the wave, and we're ending with a lot of questions in people's minds, I think, which are all valid, and a lot of, truisms which people took for granted at the beginning of the year are now, for the right reasons, being questioned. And I think, at least from my perspective, we've sort of come back to the way we were possibly doing business and interacting back in 2020 or 2019. So let's see where we go from here, but it's definitely volatile and interesting. That was the other word I was going to use.
Yeah.
No, it's been a slow is good.
Slow is
fast is bad most of the time. So I think it's been a year of slow for startups because they've been slowly but very quickly towards the end of the year focused on quality. It's been a slow year for most investment firms because they have had more time to invest. They've taken their time to do diligence. They've taken their time to make sure that these are high quality businesses. And I think in general, for the world, it's been a slow year compared to 2021 and the second half of 2020 on just about every dimension, except maybe on the dimension of defense, which has been a very fast.
Slow is good.
I think the way India outperformance is showing now, India has come to the limelight. So I agree with Rajan that probably the first half there was Russia-Ukraine war. But post June, July, I think the second half has been really good. And the way India has come back, the retail...
Why has it come back? Why is it outperforming now?
Retail money, one word to answer. All institutions, all the tourist money, all with suitcases disappeared. There was huge FI outflow, and it was only retailers who actually became stabilizers. So just if I have to answer that in one word, it's retail money.
Yeah.
Yep. So I think I'm a minority on this group because I'm a startup founder. I'm an entrepreneur. And from our perspective, we've seen the best year of growth, and not just for us, but in our entire sector. I think if you see consumption story in India is extremely strong right now. And if you keep aside the discussion on funding, rounds, valuations, down rounds, all of that, and you focus on the business fundamentals, which is what we entrepreneurs should be doing all the time, then it's never been a better time to be an entrepreneur in India across sectors. So it's fantastic right now from a demand perspective.
And as investors, is that how you view it? Is it never been a better time to be an investor right now? How do you look at the investment landscape in 2023? Let's look forward another 12 months.
Yeah, I think it differs a little bit by what stage you're investing in.
Yeah.
I think primarily being early stage, and same as Rajan, I actually don't think there's been a better time. I think, I forget the exact words in one of your morning sessions, but it was vanity, sanity, reality.
Yeah.
And I think those really echo what a lot of us feel today. I think Saroja's point is very valid. The best founders actually find their footing in these kinds of markets. Think about building businesses the right way. The right sort of investment partners also come out and hopefully encourage that sort of behavior. So given the amount of capital that was raised and the amount of dry powder, I actually think there are very few places in the world and very few stages as now to invest in. And so I actually go into 2023 feeling quite positive. But I think still being realistic. I think just having that measured approach is very important.
Positive, realistic, measured.
Yeah, look, I agree. It's a fantastic time to build because it's less competitive, talent's more reasonable, markets are not hyperbole. Customers who buy will buy only if your product is real. It adds significant value. So it's a great time to build. It's also a great time to invest because, you can take your time. It's not hyper competitive the way it was, let's say, in 2021. You can, pretty much get reasonable prices because, again, given the market environments. And the founders who are building today are really, and especially the ones that will make it through 2023 and possibly even 2024, are going to be very resilient and they're going to build very high quality businesses. So I would say, great time to build, great time to invest, and the most important term going into 2023 is quality. It is time for very high quality. If you've got an average quality business in 2023, you are toast.
Right. What is quality? Define quality.
Quality is, you've got a viable economic engine. If your business is, if you lose money on every order, if you lose money on every transaction, if you lose money on every sale, that is a very low quality business. So at the end of the day, look, quality means either you've got a path to profitability or you're profitable, but in a few years out, not immediately, but let's say 3, 4, 5 years out, you've got to be able to generate significant amounts of cash. And the only exception is if you're in a deep IP business, semiconductors, you're trying to come up with the next big breakthrough in life sciences, it's okay to take 4 or 5 years before you're going to launch a product. But for everything else, you've got to have clear line of sight to having what we call an extraordinary economic engine. If you don't have an economic engine, you're toast. And unfortunately, look, the reality is across the world, not just India, China, US, Latin America, GCC, Africa, Europe. Over the last several years, you've had a bunch of businesses that unfortunately really have no sign of having an economic engine. So if you can't build a very strong economic engine, 2023 is going to look a lot worse than 2022.
Do you have an economic engine? Quality, Saroja?
I think so,
Are
yes.
you super quality or just
It's a
quality?
very high quality business.
High quality.
Very high quality.
Yeah.
2023 is about very high
India's
quality.
fastest growing jewelry brand.
No, I think, entrepreneurs that distracted themselves from the fundamentals of the business. And I have to be honest, over the last 7 years of being an entrepreneur, there have been times that we've gotten carried away with the amount of capital that was coming our way and wooing us. And we have all made those mistakes, and I think this is a fantastic time for entrepreneurs to learn very fundamental lessons about building a long-term, profitable, sustainable business. And I hope that actually this gloomy times last a bit longer, because I fear, the biggest fear I have for the entrepreneurial ecosystem in India is that greed overtakes fear faster than fear overtakes greed. And money will come right back. And when it does, entrepreneurs will forget the lessons that they've learned. So it's very, very important that the entrepreneurs in India or globally do not forget the lessons of building a strong, economically viable business in the future after money starts coming back.
So I echo Rajan's and Saroja's thought. I think it's a fantastic time to invest for a simple reason that the greed of the promoter and the greed of the market is there's a reset that has happened. So you'll get the assets at the right price. You were making investment where all the fancy valuations are gone because we've seen what has happened when you just sit with the greed. So I, as a banker, always tell the companies that we take public that, leave 20-25% on the table. Then the capital market checkbook is always there for you. And now I'm actually seeing that. So given our own firm's example, we're sitting on 4 deals, ain't happening for last 6 months. In the last 1 month, all 4 went through because everybody was willing to come at a new valuation. So there's a reset, and that is a reality. So I think it's a fantastic time. You're getting assets at a real price.
How much more do prices have to come down? Do valuations have to come down?
I think everything's in the price already. A lot is built in already.
Private and public?
Yeah, I think, look, basically the reality today is if you have a poor quality business, you got a mediocre business, you're just not going to raise at any price.
Right.
We're in a market where basically quality trumps everything. You're just not going to be able to raise. I mean, we're not interested in investing in mediocre quality businesses. Actually, he probably won't even take it for free. No, seriously. Because the reality is if you've got an average quality business, you've got a mediocre quality business, you're just not going to be around. that's the market we're in. So valuations have clearly corrected. We saw that in the public markets. Beginning of the year, it happened in growth stage, probably sort of end of Q1, Q2. Private markets all the way through seed, we've seen it correct. And, it's really about quality now.
Yeah.
And if you have a quality business, by the way, you'll be reasonably valued. You're not going to get, extraordinary or exuberant valuations that you might have been able to, command in, let's say, 2021. So, things are fairly priced. But I think this notion that it's not just about price. Today, the reality is if you don't have a very high quality business, you will just not raise at any price.
Yeah.
Biggest worry of 2023? What's your number one worry? It can be geopolitical, macro, whatever, micro. What's your number one worry of next year and why?
I think for me, it's much more macro and geopolitical because they're sort of intricately related. Because that has repercussions, at least in the short term. Even though there is dry powder, most of what we do is so much built on just the right sentiment and the right environment. And I don't disagree with what Rajan's saying at all. I think quality trumps everything, but in an uncertain environment, you kick the can down the road just to take that decision. A lot of that did happen this year. It happened in 2020 in the early part when we didn't know what was happening with COVID. And given where things are right now, those things kind of just playing out the right way and hopefully settling down by the mid part of 2023, which is, I think, best case at this point, at least, and keeps the outlook for the second half of 2023 into 2024 much better, because most people are taking more of a 9 to 12 month view as opposed to immediate 3-month view. So that, I think, sitting here where we are right now in December, that's probably my number one concern.
Number one?
I think just making sure that all of us collectively, founders, investors, we just have to be very, very realistic that this is not going to turn around the corner come 90 days from now, right? We're in it for the long haul. There's lots of uncertainty. Will interest rate hikes tap out? We don't know. What's going to happen in Ukraine? We don't know. What is China going to do? We don't know. There's so many uncertainties here, right? So I think we just have to be very realistic and say, in business, it's always good. You plan for the worst and then you all perform.
Is there one of those uncertainties, China, Ukraine, interest rates, that worries you more than any of the others?
Actually, I don't worry about, because none of those things we can control.
Yeah.
Right? What we worry about is, are we partnering with the best founders? Are we making sure that we help them build high quality businesses? Those are the things we can control, right? As our partnership, unfortunately, we can't control the outcome of Russia, China. Russia, Ukraine, we can't really control what the Chinese president does or doesn't do. And we certainly can't control the interest rates in the US. But we know what we can control. So we really focus on things that we can control. And that's what we worry about. We wake up every morning saying, we've absolutely got to find the absolute best founders on the planet. We've got to partner with them. And then how do we make sure we're going to make them successful? So it's not something that, we try to, as a firm, we try to focus on things we can absolutely control.
Number one worry?
I think there are 4 big important themes for 23. Inflation, recession, China reopening, and the Fed pivot. So I think 23 will be a year of 2 halves. The first half we'll be addressing inflation and recession. I want to believe recession will be short-lived. And the second half will be all about Fed pivot. So nobody knows, will it be a soft landing, will it be a hard landing, markets will react differently, will it just be a pause? Even if Fed pauses, markets could cheer. So it's all about, I think inflation we are done with, rate cycle is behind us. Recession, it's almost there, it's predicted, but I think it will be short-lived. And China reopening, you never know how China reopens. It could be open, shut, open, pause. You don't know how China reopens, and the real consumption and for the industrial commodities will come from China. So these are the 4 big themes that I'm focusing on for 23.
Saroja, what's your number one worry?
The worry is that all of us have become very short-term focused, and we're only talking about 2023. And if you think about the future of India, and at least speaking about India and the consumption story and the demographic dividend that will play out, this actually is the right time to invest. But neither founders nor investors are, given the uncertainty, are able to focus on building for India for the long term. And that's very unfortunate that it is happening at a time like this for many factors which are not really in India's control. And as a founder, I just really feel terrible that we are not able to invest for growth, which we should be doing at a time like this. So it's very short term. our mindset.
Oh, I disagree with that completely.
Yeah,
I mean, as
Like
venture
it or-
capitalists, we invest with a 10-year horizon.
yeah.
We're not investing for, to exit in 2 quarters, right? I think, I don't know, but I think as venture capitalists, we are absolutely investing for the long term. We are very, very focused on investing right now. I mean, we've probably made 10 investments in the last 3-4 months as a firm in India. But I think what we're saying is you have to build a very high quality business.
Right.
Right? So if you don't have a high quality business, it doesn't matter.
Yeah.
You're not going to raise. So I just wanted to clarify, I think at least, Karan should add to this, but I think from a...
No, I wasn't actually debating
No, I'm
what
just
Rajan
saying,
was saying.
as
You have to
venture
have a
investors-
high quality business always. Through good times and bad times, a founder should ever build. When is it a good time to build a bad business? Never, in my opinion, right? So you should always build a high quality business. Having said that, I think the uncertainty, whether it is for founders about raising capital or whether it is for investors, for everybody. I mean, of course, Rajan is right. You should always have a high quality business, but we should always, think a little bit more long term than we are doing right now, especially if you're building in a country like India. And we are making some short term decisions, I would say, as an ecosystem. And that's what I'm a little bit concerned about.
I give you all £1 million, dollars, whatever. We'll do dollars, the global currency, some might say. Invest it for 10 years for me. Where'd you put it? Where'd you put it? Where'd you put it? Probably into your own business. Let's say 10 million. Let's have fun. 10 million, I hand it to you right now, invest it for 10 years. Where'd you put it?
So, yeah, no, I think that's an easy one because we do invest with a 10-year view. So today, our focus is pretty equally between businesses building from India for the world. So I'm talking about what I'm doing as part of B Capital, which could be a combination of SaaS and consumer-led businesses as one. I think the second would be healthcare and digital health businesses because that is something which is so underexposed to the capital markets, private and public, that at some point the inflection point has to happen. I'd like to believe it's in the next 10 years. And the third would be around climate and sustainability. I don't need to go into why. I think that's a very obvious one. And I think there is another sector where India will play and have a very meaningful role over the next 10 years. And the sort of innovation that we're seeing now, in light of everything that's happening, makes me believe that is a business opportunity as well as having all the right elements around impact, et cetera. So those would be 3 areas that I would, and I'm putting your money where my mouth is, because that's where we're investing. So that was an easy one.
Yeah.
New battery chemistries.
All 10 million?
No, yeah, all of it. Yeah, because basically, look, we got to have new battery chemistries so that countries like India, we are not dependent on minerals from places maybe where we won't be able to get the minerals. So, we'd love to meet a company that's got, and by the way, there are a few that are emerging out of India now, because we're seeing a lot of very interesting IP come out of India. And yeah, that's really what we're looking for. We want to find a battery chemistry, a new battery chemistry that is not lithium-ion.
What sort of return might you receive in 10 years if you were to invest in that?
Yeah, if it works, it'd be bigger than Tesla.
It's uncapped.
Yeah,
that's
yeah.
Bigger than Tesla.
Yeah.
And by the way, we will build companies in India that are bigger than Tesla. So it may take us a little longer than 10 years, but we'll get there.
This audience is on fire. A lot of clapping going on. Good.
It's good we have an audience.
Yeah.
Also very good.
10 million, where's it going?
Needless to say, I have to outperform, right? I'm taking care of your money. So my broad theme would be ESG. And probably anything to do with green, because we've seen COP26, 27, 28, everything's only spoken. Implementation, application on the ground, everything is yet to happen. So I would go and identify companies which are helping them achieve those goals. So anything to do with green energy, green hydrogen, that would be my top focus.
I think battery chemistry, now we have 10 plus 10. We have 20 million going to our battery chemistry company.
And you have a third from me.
Saroja, you
third
can't
sector.
invest in
million
your own
dollars.
company. So what do you do with my 10 million?
Grow the business, knowing fully well the profitability will be around the corner.
Yeah.
Be confident about that. Yeah. So, but obviously I'll have to sit this one out. I'll invest in consumption story of India any day. It's not just in my sector. but I'm long on India and long on Indian consumerism. So
Let's get a question from the audience. There you go. Lady there. Let's have a microphone. Remind us who you are.
Again, yes.
We like you. We like you.
My name is Shraddha. I help companies enter and diversify in a new market. So we've seen a spate of sort of unicorns and IPOs in India. So from your perspective, 3 companies that have that growth engine that you've been talking about, they'll be India leaders, global leaders, and 3 companies who made it big despite having that economic engine and who you think are overestimated.
wow.
Indian companies.
Sorry, what's the question?
Who's going to be brave? Sorry.
Yeah.
So 3 companies in India who you think have made it really big and have that growth engine that you're talking about. They can be India leaders and global leaders. And 3 companies who have made it big but do not have that economic engine and you feel that they're not going to do anything about it now.
Yeah, I think the second question, the 3 companies, I think we shall not answer that.
Come on, be brave.
Come on, we're not going to be brave today.
No, I think that one specifically, I think the capital markets kind of show you which ones are valued and which ones are not valued correctly. I think the capital markets are probably smarter than private investors. So you'll get enough examples from that.
Yeah, I think in terms of companies that are very interesting, look, the 2 most profitable companies in India are basically Zerodha and startups, right? The way we define startups, I mean, one's really been around for a long time, are Zerodha and Zoho, right? So they both generate over 2,000 crores of net profit per year. And if you were to ask me a third company, that would be Infosys. They've generated 1,000 crores of net the last year, right? So these are 3 very, very strong economic engines. In fact, if you look at the top 500 startups in India, over 50 of them are already profitable, and our estimates is that by 2024 end, it's very likely that fully a third of them will be cash flow positive. So I know there's concern right now about Indian startups not being profitable, etc. But the reality is, environments like this, they really get founders very, very focused.
Yeah.
Laser focus on one thing, which is break even and get to cash flow positive.
They were all bootstrapped.
No. Infosys was funded, right? Went public. Yeah. No, there are lots of other companies that
So
are.
I'll just add maybe to that. I think 3 companies which are maybe not on everyone's radar, but I think will hit the public markets in the next 24 months. One is a company called First Cry, and they would have gone public already. They're cash flow positive. The other is a company called Lenskart, very similar, and I'm biased since I invested in both of them, but they will hit the public market. And to be fair, the third one is a company called Off Business, which is again cash flow positive. It's a tremendous story about how they built manufacturing from India, connecting businesses together. There's probably another 15 companies like that, maybe 20 companies like that, which are cash flow positive, generating north of $500 million in revenue. So these are large, sustainable businesses, which when they do hit the public markets, and Gautam will know this much better, will actually create that sort of demand from investors, both retail as well as institutional.
Okay, the time police is in my ear. Big round of applause for our wonderful panelists. Thank you very much. Edie is chomping at the bit. She's waiting in the wings. Well, she'll be with you in just a second with the final panel of the day.